Good morning. It's Harvey Jackson from Producer Profit. Just more news about tariffs, and USDA came out as well. Drought Monitor index is a little bit lower, but we'll just have a look at all in all. So Trump tariffs, China hits back with U.S. by increasing tariffs to 125. I think the tariffs are now at 145. That's getting applied to China. But I think this is probably what is getting played by both of these big economies. They're just back and forth, and President Xi, whether he's even wanting to talk to Trump at this point, I think there might be some of his dissidents probably talking, but that's about it. I think they're pretty quiet. So when you're looking at just some of the actual products here, so soybeans. And its size, it's number one, and basically it's going to get shut off. I'm still yet to hear if those orders are going to get canceled there yet, but we'll see. But when you look at what do they ship to us, mobile phones is number one, and then your computers and all that other stuff, clothing, textiles. But this is probably the more impactful, and I've shown this before. But when you raise the tariffs up to 125. These values are going to be a lot greater than this, than what's proposed. So we'll have to see, because right here in the note it's talking about 28%. Anyway, so China hitting back on the tariffs. Beijing increased tariffs to 125, hitting back against the U.S. Putting duties on 145%, raising the stakes of the trade war. Exodus, so this is one of the ministers for President Xi, is just basically saying that there's going to be an exodus of U.S. assets and following currency. They can hurt the U.S. economy by just pulling money out of there as well. But we'll see how all that plays out. It's a clear tit-for-tat kind of scenario here. Palm oil increased. Corn is actually increased quite a bit too, but we'll see that on the charts here. Soybeans looks like it's going to have one of its best weeks since the trade war, maybe, or the beginning of the trade war, or Liberation Day, whatever you want to call it. So here's your USDA corn number was a little bit lower than the previous month end trade, and same with soybeans. I think it's more on the 122 here, so it's right on the trade expectations, and this is just slightly higher. And then when you're looking at what's left for ending stocks in the U.S., corn's lower, soybeans is pretty well right on trade gas, but wheat is slightly higher. And then South America crop, there's some adjustments there. Conad came out yesterday as well, and their numbers are slightly different, but they never quite align ever. But the crop is big down in Brazil and Argentina so far, and I don't think that's going to change. And they're going to be the preferred supplier of all the beans for China for sure. So Drought Monitor, you can see that there's some changes here, and drought is basically disappearing in some of these key stuff that we're looking at here. So you can see the Drought Monitor index, still drought sitting in some of these areas, but it's not as big as it has been. And here's the Canadian, and it kind of showed up there on the previous slide there as well. But still not severe drought or anything, but it is soil moisture is lacking in some areas, but you can see it's definitely got some areas of excess. So canola basically flat, same with European rapeseed. Soybean oil is up, palm oil is up as well, just slightly, and crude oil trying to trade flat as well. Soybeans up a penny from its big gains that it had yesterday. Spring wheat up as well. All wheats are up actually, and corn's up, and the Canadian dollar's up as well, with feeder cattle up. So here it's just a different look at some of these charts here. But so your July futures, it's got a very nice trend. Some clients got in here, some clients got in over here as well. So still looking for that 698 as an exit. Still, if you're late to the game, still wanted to get in, just manage it with tight stops. Here's your soybean oil futures, and a nice little recovery here. And if we're just looking at moving averages, it's supporting, and you're in the trying to approach that 23.6 retracement value and get above it. So it has to get into this range before you'll see that next leg higher. Here's your palm oil, and I just zoomed out a little bit, but it's trying to recover off of some of these values, but it's still relatively strong. Soybean futures themselves, almost back to that same value that before some of the tit-for-tat kind of a scenario that we've been seeing since Liberation Day, almost made back all of those gains. Crude oil, it's fall from grace here. It's still holding at these bottom, right around that $60 barrel for sure. Rapeseed, trading at that 511 area, and your Canadian dollar, it's up at that 72.16 trading value. So just a quick look at wheat here, spring wheat, looking to recover back to some of those values in March, but ideally spring seasonality should get this market moving at some point here, as planting is pretty slow. Well, almost non-existence in Western Canada for sure. So here's your spring wheat December futures. Still looking for values up here for futures first kind of contracts, but that might be it might seem like a dream, but hopefully those markets will get us there. And normally it does get moving in that direction. Your Kansas wheat, and here's your Chicago wheat. And here's your corn, and this is that leg that the corn's been on. It's a really nice move up that we've seen lately, and who knows, we might be back into this $5 mark if we get there. It's another 16 cents higher. So we can cross this one off, and the next one is May 8th, and it'll be a stats can.